Good morning, everyone. Andrew Marquis, Cross Country Mortgage, reporting in with our Monday morning rate update and product update. Hope everyone had a nice weekend. And now we're second year of 2023. It seems like things are going to start to get back into the swing. So I wanted to bring you those rates, and I do have good news as it relates to rates. So we've seen some nice improvement. I do expect rates will drop a little bit throughout the year, slowly, but I do think that they will slowly come down. So we're starting with our conforming loan amount, which for 2023 is $726,000 or less on our loan amount. All with 1 point. Rates without 1 point are typically about 0.25% higher, but I like to quote with 1 point. That's how we see most of the loans originated. 30-year fixed, 5.875. 15-year fixed, 4.99. 5-year ARM, 4.625. 7-year ARM, 5.125. 10-year ARM, 5.375. Now switching to jumbo, loan amount above $726,000. 30-year fixed, 5.5%. 10-year ARM, 5%. 7-year ARM, 4.875. 5-year ARM, 4.25%. So what that tells me, when you have shorter term ARMs where the rate is dropping that much, it's predicting that we're going to see lower rates coming down the pike here. So good news for the market. What I do want to say about our local Boston market is we've had a lack of inventory. We still have a strong buyer demand. And as these rates go down, offers are getting a lot more competitive. Buyers are starting to lose out again. We're not back to where we were a year ago, but things are getting competitive again. So that window of opportunity for buyers to buy, do contingencies, lower down payments, special programs, that window is closing quickly here. So if you have buyers and there are options in the market, you do want to act fast, because I suspect as rates go down, that competitiveness with the offer process will become higher, and those buyers will be edged out again. So it's just what the Boston market is. We're a different market here locally in this area. What I'm going to start doing is a real life example on these videos. So I had a great example from Friday night. I had a call from a client. They originally wanted to be pre-approved to buy, contingent on selling. We'll buy another house as soon as we sell ours. What they don't want to do is move twice. They don't want to have to sell their house, then rent somewhere, then buy. They don't really have anywhere to go. They also don't want to list their house, sell it, and then be forced to buy something they don't really want to buy because they can't make a selection. So their big issue, they didn't have any down payment money available. They had a great income. They built a lot of equity in their current home, but they didn't have much cash. They had about $10,000 of liquid cash, which is clearly going to be kind of low for buying a new house for a down payment, closing costs, etc. What we were able to do for this client is offer a bridge loan, which would allow them to access the equity they've built up in their current home, tap into it. They can then use that money for down payment, closing costs, renovations, improvements, etc. They're qualified now to buy the new house before they sell, so they can put a new house under agreement when the right one comes about. Then they can list their house, sell their house at the same time, but it gives them much more flexibility. They don't have to have contingencies with their offer. They're going to be able to sell their house at a better price without those contingencies. They're going to be able to be more choosy and selective about the one they buy. So it's a great opportunity if you have clients that want a pre-approval, that want to buy before they sell. We have those bridge loan programs and scenarios that we can put together. We're very creative. So please reach out to my team and I. It's www.themarqueesteam.com, and hope everyone has a great week ahead. Thanks so much. Bye-bye.